China's accelerated push to internationalize the yuan. China signals aggressive push to elevate yuan's global role. By Red Alert Team Hong Kong. November 18, 2025. China has taken a decisive step toward expanding the global influence of its currency, the renminbi, by removing the word prudently from its 2026 to 2030 economic development blueprint. A shift analysts say marks Beijing's boldest signal yet that it intends to intensify the yuan's internationalization drive. The policy adjustment comes as the yuan continues to gain ground in cross-border trade and financial settlements. According to recent data, the currency's share in global transactions climbed from 7% in 2022 to about 8.5% in 2024, while China now settles roughly 27% of its total trade, valued at around 12.4 trillion yuan, $1.7 trillion, in its own currency. In a notable move that illustrates the trend, China's steel sector recently halted U.S. dollar payments to major mining supplier BHP Group, requiring that 30% of certain iron ore transactions be settled in yuan. Economists say more industries may follow this pattern as Beijing expands infrastructure that supports RMB-denominated trade. Despite its growing influence, China insists it is not seeking to dethrone the U.S. dollar entirely. Government advisors emphasize that the yuan's rise will be steady but strategic, even as capital flow restrictions remain one of the biggest barriers to full convertibility. Experts say the shift in language within Beijing's development plan is symbolic but consequential. Removing prudently suggests that China is preparing to adopt stronger measures, including regulatory adjustments and expanded currency swap agreements, to increase foreign partners' willingness to transact in yuan. With China accounting for 15% of global trade, even small upticks in RMB settlement could alter international financial patterns. Economists warn, however, that geopolitical tensions and China's tight monetary controls may temper the pace of adoption. For emerging economies in the Asia-Pacific, including Papua New Guinea, the trend could open new options in trade financing and settlement, though it may also introduce new exchange rate and policy risk considerations. Bottom line, China's latest policy shift signals a new phase in its long-running campaign to expand the yuan's reach. While the U.S. dollar remains dominant, Beijing's actions indicate a growing determination to reshape parts of the global currency landscape.